Hi, very good morning to all of you. So let me just get started here. I'm hearing a bit of echo, some feedback. Okay, never mind. So I'll just jump straight in. So it's great to see so many of you here today, bright and early on a Saturday morning, especially, right? So thank you for giving us an opportunity to share with you on your market outlook for 2021. So lost or wasted, surreal, transformative. These are some of the words that many of us have used to actually describe year 2020. And I guess the most overused word was probably unprecedented. I think many of us, basically says that, we will never ever want to hear that word again. Well, whichever word we choose to use to describe year 2020, last year was probably a year of a great reset for most of us. So what's in store for us for this year, 2021? For this year, we expect global growth to basically recover, as manufacturing recovers across the regions. But of course, the path will not be straight, and we'll probably face some speed bumps along the way to recovery. But having said that, we do believe that on a year-on-year basis, this year versus last year, there will be improvement this year in terms of global growth. So just a very quick recap of what happened in year 2020. You'll see that on these two charts, we see very sharp, a V-shaped kind of chart, on the left and on the right. So on the left is for manufacturing, on the right is for services. So the crash happened in second quarter last year. And basically there was a very strong rebound thereafter, on the back of the reopening of the various economies, right? So this rebound has since moderated a little bit as governments have reintroduced various forms of lockdowns in many parts of the world towards the end of last year, and that has actually carried into the start of this year. So that's because, it's not surprising because of the resurgence of COVID cases in many parts of the world. So we do expect to see some form of weakness in economic numbers in the fourth quarter, as well as the first quarter of this year. So this may technically push back the recovery story that we're talking about by a quarter or two. So as a summary, basically, we expect to see better economic numbers this year versus last year. Now, what is clear is that Asia appears to be very resilient, right? And this is because of a China-led recovery. So you see that North Asia benefits from tech-related demand, right? So you see that this is especially evident, the rebound is especially evident in Korea as well as Taiwan, Now, let's turn to the KLCI, right? So the KLCI actually closed positive last year, despite all the negative news, on COVID, on the lockdown, on politics, So for the full year, the KLCI in local currency terms, right, rose 2.4%. And was the outperformer in the ASEAN region. So if you look at all the other countries on the left, basically Singapore, Philippines, Thailand, Indonesia, so basically in ASEAN we were the outperformer. But of course, compared to Asia Pac ex Japan, we didn't do as well because Asia Pac ex Japan rose close to 20%. Right, you can see that, and of course, it was supported by Taiwan and Korea. Now, so if we drill deeper into the sectors, which sectors actually did well? So obviously IT did well, right? IT, healthcare, consumer discretionary, consumer services, and the drags came from real estate, energy, financials, and utilities. So in Malaysia, do we see the same patterns? So it's clear that yes, we do see the same patterns. If you look at healthcare right at the bottom, that was the outperformer of last year. close to 186%. In fact, it did a bit better than that. At one point, I think it was above 12%, but then it corrected mainly because of the glove sector. And tech also did very well. So if you notice, tech was up as well. Bursa Malaysia Technology, which is the third bar from the bottom. And finance actually was down -1. Right? But this is after a rotation into cyclicals in the fourth quarter of last year. Otherwise, it would have been down much more, right? So we did see quite a sharp rebound in banks in the fourth quarter of last year. So as I mentioned, basically, we saw signs of market rotation in the fourth quarter of last year. There was optimism, right, which emerged as markets turned hopeful on the back of vaccine news. And as a result, we saw a quick rotation into some of the COVID hit sectors, right? For instance, finance, as I mentioned. So if you look at the chart here, you see that, for the quarter, the red bar actually swung into the positive, for world financials. And there was also a trend of value outperforming growth in that particular quarter. Yeah. So in terms of currency, the ringgit was up, about 1.7%. We weakened to about 4.45 sometime in March, right, when there was a liquidity crunch. And then basically we strengthened back to the level where we started the year. So technically it's up 1.2%. Yeah. Now, so what's next, right? So we've taken a look at the economy. We've taken a look at the market. We've taken a look at the sectors within the market, as well as the currency, right? So what's next for us? So what's next is basically, some realities that I would like to flag, which form the basis and assumptions for our market outlook for 2021. Yeah. So I call these realities, with the first one being the US presidential election overhang that has been removed, right? I mean, previously this was basically, worded as largely removed. But of course, since Biden was inaugurated as the new US president on the 20th of January, this overhang has been removed. Yeah. So what does it mean? I mean, I won't go through all this, all the drama that actually, accompanied this election. Yeah, there was a lot of drama. Okay, so what it effectively means is that a Biden US presidency would continue to see a very accommodative monetary policy, which means that interest rates will continue to stay low. Fiscal policy, of course, will still be a key boost, right? In fact, Biden has just come out to announce this 1.9 trillion USD fiscal spending, right? But of course, this will be supported by higher taxes. Trade war on the US-China trade war front. Of course, we don't expect the US to let China off easy. But we expect the relationship to be a bit less ad hoc, a bit less combative, probably. Yeah. So so this is what it means, for a Biden presidency. And overall, we also expect this to be positive for emerging markets, which would then encourage flows to move into emerging markets, right? So reality number 2, right, is about vaccines. So vaccine trajectories to shape global recovery. Now, as you would know, in the fourth quarter of last year, markets became very optimistic and excited, emerging out of this whole dark and gloomy period of lockdowns, right? So last year you would have heard, how many new cases and all that, but towards the end of last year, we began to have more news flow on vaccines coming out from various fronts, So, so if you look at, this slide, I won't go into details. You all know that we are we are in the third wave now. Yeah. So just a quick update. Basically, globally, I think there are 94 million people who have been infected with 2 million deaths, right, resulting in a death rate of 2%, right? So I can't keep up with all the MCO, restrictions and all that now. I think that the latest one basically says that it's been extended to the to the 4th of February, I think, yeah, for certain states, yeah, and federal territories. So in essence, what this means is that, you know, yeah, so there will be some weakness in some numbers, yeah. But of course, we know that the current lockdown allows most businesses to carry on. The fear, of course, at the start was, you know, if you're going to do a very strict lockdown, like what we did in March last year, that would have been a very, very negative factor, you know, impacting the overall economy. So I guess the country, the government has learned that, you know, they really do need to balance lives and livelihoods, right? But of course, you know, it's not an easy equation to balance, we have to say. So coming to the vaccine updates, yeah, what we see is, you know, there are a lot of companies who have submitted names to the WHO. So if you go and visit the WHO website, you will see a huge long list, I think close to 100 plus, close to 200, if not mistaken, names, right, of vaccines, you know, being submitted for WHO's assessment and such. So, but of course, the three main ones that we are familiar with would be Pfizer BioNTech, right, which is a collaboration between the US and Germany, and of course Moderna, right, which is US based. And the third one is AstraZeneca, Oxford, which is UK based. So of course, all these, you know, companies have basically mentioned that these vaccines are actually quite, you know, have 95% efficacy rate, you know, with no major side effects, you know, things like that, right? But of course, that there are logistical issues involved as well in terms of like ultra cold storage and things like that, you know. So for Malaysia, you know, I think our minister KJ has said that he expects to roll out the plan, the vaccination plan. You know, for 80% of Malaysians, right, and the whole plan should be completed in 18 months. You know, so if you're thinking that, you know, when the vaccination starts in February, then all will be rosy, you know. I don't think so, because, you know, you need to get herd immunity, which basically kicks in only after 60 or 70% of your population is vaccinated. That is based on medical experts' advice, yeah. So Malaysia, basically, we're targeting 80%, right? And we'll get our first batch of vaccines in end of February. Now, of course, we see the vaccine as a game changer. I mean, compared to last year when there was no news of vaccine, for instance, like maybe in June, July, or whatever, when you know, the vaccine news basically only came out towards the end of last year, right? So obviously, this is a game changer for us in terms of prospects. You know, the prospects provides quite a favorable backdrop to risky assets. And I mean, generally, if you look at the move in the market in the fourth quarter of last year, you would realize that basically investors believe that this vaccine will more than offset concerns about the rising COVID cases. So actually, you know, realistically, we're in this particular phase now, right, where we are waiting for vaccines to be rolled out. I mean, in Malaysia at least, you know, other parts of the world, they've actually started this inoculation program already. So for us, you know, most of us basically we're just at this phase where we're waiting for the vaccine to come out, waiting to hit 60-70% vaccination and herd immunity, right? And as we are waiting, some people have actually thrown caution to the wind, you know, and not complied with SOPs and things like that. And we've seen a significant surge in COVID cases, right? So we're here now. We're in this transition phase. You know, can we make it, you know, to something more contained? You know, so you know. Yeah, so we're here now, okay. But what we can say is that the numbers on this page that you see here, 15 million shots given. So this is a COVID-19 vaccine tracker for the whole world, right? So these numbers are practically, I think, a bit outdated now, right? I think it's about 46 million doses have been given in 51 countries, right? In the US alone, it's about 15 million. right? So these are the numbers that we are looking at. So of course, we are saying that it's a game changer, you know, but we also can't ignore the realities on the ground, including medical realities. For instance, you know, what is the longevity of the you know, effectiveness after you take the 2 jabs? Who knows what happens after that? How long will it stay effective? You know, will it cure? Will it remove symptoms? You know, can you still get infected after that? What are the long-term side effects? You know, some European countries have reported deaths, you know, amongst people who have taken the vaccination. So this is still hanging in the balance, you know, but on a relative basis, of course, you know, having vaccine is better than no vaccine. So incrementally, it is a positive news. Yeah. So as I mentioned, for Malaysia, okay, I won't go through you know, all these. Yeah, but you would know that we have I think secured vaccines for about 40% of the population. Yeah, 20% from Pfizer, 10% from COVAX, and 10% from AstraZeneca. So the government is still in negotiations with I think Sinovac, Gamaleya, which is Russian, right? And then CanSino, right? To cover more than about 80% of the population. So, you know, as I mentioned, it will take 18 months or 1.5 years to fully complete this vaccination plan. So maybe, you know, will we be successful? Will we actually hit the 18 months to complete the whole thing? It depends, because there are some anti-vaxxers out there as well, people who refuse to take the vaccines, people who say, oh, why don't I just wait for a while and see what happens? You know, I don't want to be the guinea pig or whatever, you know. So yeah, so we probably have to ask ourselves, you know, the people on this call, will you take the vaccine? You know, and that would probably impact the timeline needed to actually hit herd immunity. Okay, so we've talked about the US elections, the overhang being removed. We've talked about the vaccine trajectories, right, which is incrementally positive, we hope, right? And then reality number 3 is basically about support, fiscal and monetary support from the government, you know, for economic recovery. So I won't go into details here, but suffice to say that central banks will basically keep interest rates lower for longer until they see some form of inflation. In fact, in the US, they're talking about average inflation targeting now, so which means that they will be happy to see inflation overshoot before they decide to raise interest rates. Yeah. And they've actually said that, you know, interest rates will stay low at least until 2023. I mean, that's for the US, yeah. So, you know, I think yeah, we probably have to work on money a little bit harder, you know, if you're looking for returns, if interest rates continue to stay low. Fiscal stimulus goes without saying, okay, that a lot of governments have actually introduced a lot of support for their economies, right? For the man on the street, you know. Yeah, so next, Malaysia, right? Our government also basically did quite a lot of, you know, stimulus on the fiscal front. Of course, this hasn't taken into consideration the latest PERMI package, which has been announced recently. I think it's 15 billion, if not mistaken. So you add that to this 305 here, so that's Prihatin, right? There is the Prihatin Plus, that's the Penjana, that's the Kita Prihatin, which is 305 billion. You add another 15, so it's 320 billion, which is, you know, more than 20% of the GDP. But of course, the government's direct spending is less than that. Okay, it's 55 billion plus 2 billion for PERMI, so it's 57 billion. So about 4%. So it's about 4% of the GDP. So yeah. So if you look at our GDP for, you know, the quarters, of course, it plunged 17% in the second quarter of last year, and then third quarter it did better because of the reopening, so it fell 2.7%. And in the third quarter, basically the rebound, you know, that we saw was across the board for all the sectors, you know, for all the sectors in the third quarter. And the labor market also improved at the point in time. I think the worst was 5.3% unemployment, you know, in May, and then basically it improved to 4.6. I think the latest numbers basically is has ticked up to about 4.8% unemployment rate. Yeah. Now, yeah, so we look at, you know, our budget. Okay, so our budget is expansionary. And to set the context, the budget is actually a continuation of the earlier stimulus packages that I actually mentioned just now, right? So it is the largest budget we've had so far. It stands at 322.5 billion. And of course, the big jump came from this one, the development expenditure, the CAPEX, right? Increasing from, 49 to 68. 68, 69, yeah. So of course, they're talking about large, doing this large-scale infra projects, Pan Borneo, Johor, Singapore, rapid transit system, MRT3, to actually boost the economy. Of course, the KL Singapore high-speed rail has been cancelled, but there has been talk that Malaysia may go ahead with the Malaysian portion of it, so we're not sure there, yeah. So we do hope that these projects will spur the economy through their multiplier effect. But of course, we don't have, these are not new projects, and we don't have that much details on the timeline of these projects. So there have been some backlash, okay, in specific areas for this budget. But generally, we can say that investors are positive about this budget. So really, it's down to implementation. Okay, because timely implementation is important to support the people on the ground and to support the economy. Okay, so because of this large scale spending, so we see deficits, hitting 6%, -6 for this year, and minus 5.4 for next year. So MCO 2.0, right? So this year has been quite eventful, although it's only January. We've had MCO 2.0, we've had a declaration of emergency, and of course we've had overseas, of course, Biden going ahead with the inauguration. So anyway, Bank Negara. Bank Negara cut OPR. They did not cut the OPR I think it was 2 days ago when they had the OPR, when they had the meeting, right? So it was kept at 1.75. But going ahead, going forward, we know there may be at least another cut, in the interest rates we see if the economy doesn't pick up, or if the economy continues to struggle, for instance. I think for now, Bank Negara will probably, wait a little bit to see the impact of the fiscal stimulus on the economy before they decide to act, right? So, yeah, okay. So what we see here now is that in 2020 alone, Bank Negara cut the OPR from 3% to 1.75%. So it was a drop of 1.25%. So that is quite significant, yeah? So moving on to reality number 4, right? COVID-induced changes are here to stay. I mean, I don't have to tell you this, right? That basically technology and innovation is a common theme across Asia. I mean, you and I are direct participants in this move or change in behavior resulting from COVID, right? I mean, I think doing calls and webinars like this, or maybe even doing your own corporate or office calls, you probably, it's a norm to hear your colleagues telling you are on mute, yeah, so it's very common now. It's like a very common saying now, right? So basically we think that that this IT and tech theme has already been there, yeah, but it's just accelerated quite a bit, yeah, with COVID. And of course, the next trend that we see coming out of COVID is ESG. The investment community has basically, become much more aware of ESG, right? I'm sure you all know what it means, right? So environmental, social, and government, basically governance, huh? So environmental, people are more concerned about the climate, biodiversity, renewable energy, pollution, things like that. Social is about, whether you're treating your workers right, whether you're giving them proper accommodation, whether you have proper diversity on your board, and etc. Are you abusing your workers, things like that. And governance talks about fundamental, governance, reform, institutional reform. things like that. Yeah. So, okay, now, just to summarize the realities, right? So reality number one, as I mentioned, US presidential election overhang is removed, right? Biden inaugurated, right? Yeah, and then no full reset of US-China relations, vaccine trajectories, shaping global recovery, so that's positive. Fiscal support also positive, COVID-induced changes here to stay. Of course, I would like to flag that ESG, yeah, we can say it's a risk, right? But on the other hand, it's also an opportunity, for a lot of investors. So if we identify the opportunities early, it's definitely a plus. Yeah. So where are the opportunities after looking at all the four realities? So we look at diverse opportunities in Asia. Okay. So as we said, we saw rotation out of losers, out of winners into losers, right? So watch out for laggards this year. So obviously here, we see opportunities in various segments, but mainly in the green space, tech space, in the E space, So these kind of opportunities are quite obvious in some of the Asian countries. Valuation-wise, based on this Z-score, it was updated post the rally, right, in November, December. So this is at end of December. So you see that Malaysia continues to look cheap based on Z-score. Basically, Asia ex-Japan, high dividend, that particular bucket also seems to, look a bit cheap. Foreigners, you all know that foreigners have been net selling. Malaysia last year was 25 B, right? Double of before, okay, which was 11 billion. All right. So I won't go into details here. Why are people selling, for instance? Why are they selling? Because maybe it's political instability, which results in policy uncertainty. Right? Maybe it's weak governance, ESG issues, for instance. Malaysia is not exactly a very large market in all the regional indices. So maybe they, no point, taking on this kind of risk or whatever, for such a small percentage weight in your benchmark, maybe, right? So there are various reasons, liquidity and things like that. Retail participation, as Wei Yi mentioned earlier on, everybody is talking about market now, right? Various markets, right? And stocks, right? So the retail participation, as shown by the bar chart, the bar chart shows that it's actually still reasonably, although we say here participation lower, recently, but it's still quite high compared to last year, which is about average about 25%. Yeah, obviously the red line has dipped, and that shows the foreign participation. Valuation-wise, we prefer to take a more long-term kind of investment horizon. So what we did was we look at forward PE, so the earnings we're looking at, we're seeing that there's going to be recovery, right? So point to point, yes, is better. So when will the improvement come? This quarter, next quarter, this year, next year? I mean, in terms of investment horizon, we would like to basically extend it a little bit, and not say, and not actually pigeonhole it to, okay, it must be within this calendar year or what, So basically, it's quite hard to predict as things keep evolving, and it's very fluid. It depends on the COVID containment. It depends on the success of the inoculation or vaccination plan. But what we see here is a very sharp drop in valuations, right? And this is because I think it's also driven by the glove stocks, which fell in November, December. I think also it's because plantation earnings were also quite strong, but however, the price, didn't move. And also a lot of these stocks, the street began to roll forward their earnings to next year. So as the earnings base actually increases, therefore the PE then basically falls, right? So if you have a longer term horizon and you can stomach a bit of volatility, right? I mean, it's not going to be a straight line, the recovery and the improvement, right? So if you take all those factors into consideration, then basically the market looks okay, yeah? Now, improvement, we expect to see it across the board, right? And so very quickly, just to wrap up, because I think I may be running out of time, yeah, is that in terms of, In terms of the way forward, the strategy, okay, we basically expect this year to be better than last year in terms of corporate earnings, rebounding from a low base last year. However, MCO 2.0, does present itself as a speed bump, in the overall recovery path. Yeah, so it does push back the recovery a little bit. I think the estimate given by some houses and the government, I think as well, is an impact of 0.5% to 1% for every 2 weeks of MCO 2.0. I'm not mistaken. Yeah, so there's a range given. On the state of emergency, just to touch a bit on this, well, essentially it means that the risk of general elections, well, not just general, I think state elections as well, right, will now be put off until 1st August 2021. So in a way, it presents a form of stability on the political front, because the noises were getting louder, right, before this emergency was declared. So, we have a more positive stance now as the vaccine is now being administered globally, US elections removed, continuous support in terms of policies, right? So we basically prefer equities to fixed income, right, in terms of asset class preference, primarily based on this rebound in corporate earnings that we're expecting for this year. I mean, of course, it's a bit diluted now in terms of the degree of rebound, and a bit delayed now in terms of the timeline, because things keep evolving. Yeah, so but we do believe that we will see an improvement going forward versus last year. So there are pockets of opportunities as market rotates into COVID impacted sectors. I mean, I just got an update yesterday. Basically, I think Asia Pac for January so far is up 8-9%. So the cyclical recovery is still there, and banks still continue to run. Of course, some profit taking has kicked in some of these names. Yeah, but when we do buy into the laggards, we don't buy broad-based into everything that has fallen, right? So stock picking becomes even more important, right? We have to make sure we pick those with, strong balance sheet, good cash flow, resilient enough to rebound, so we have to pick those, and not those who will basically, go bankrupt or, derated because of a particular reason. Yeah. So, yeah, so I will need to flag to you the risk factors as well, right? Which is only reasonable, right? So politics, of course, I've removed the US elections risk from this list. So US-China relations, who knows, it may worsen, right? And then election risk in Malaysia, August, who knows, right? Nationwide lockdown, yes, but businesses are not forced to shut down. If they are forced to shut down, right, then of course the impact will be great, and it will basically present itself as a risk factor. Negative news flow on vaccines, we don't know, serious side effects. Budget 2021, risk is poor execution, so then the fiscal leg will be weak, right? Global recovery delayed, fails to happen, corporate earnings do not rebound, ESG related issues. And one more thing which I added basically is high government debt because of all these fiscal policies, right? So, a lot of governments are basically taking up a lot of debt. So that could be an issue going forward. Yeah. So, yeah, so that will be the end of my presentation. So I pass the floor back to the MC.